Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, let's go straight over to our screen here because we do have news coming up here in about a minute. The Treasury quarterly refunding announcement. You're probably going to see a pretty big move in the treasuries here in about a minute. And then later today we get ISM manufacturing PMI. That's going to be a pretty significant number as well. We already got the US ADP employment change. We were expecting 150K and we got 113. So that's a pretty big miss. It's not as insane as the beats and stuff that we got last month, but pretty big. All right, here we go. 5 seconds. Okay, and they are buying. Okay, so it was lower than the estimate. There's some pretty big trades in that thing in there. Okay, so one of the things with this one, this is actually a really complicated release, okay? So one of the things that we need to keep in mind with this one is that not only do they say like how, you know, that they're going to refund things, but they also kind of tell us how much in different maturities that they're going to do. And it sounds like they boosted it in like everything except for the 20-year. And so what I am seeing right now is the yield curve is actually flattening significantly. So for me over here in the 10-year, if we're going up and we're flattening, that means that's actually good for us over here on the longer end of the curve. Like you see how far the 30-year went, they're still pushing the highs, right? Man, are they still pushing the highs, right? Oh, Jiwi says long 07.5. That's curious because that's like exactly where they came back to. Okay, pretty wide spread here in the micros. So not my market. And that is on the new contract too, by the way. We should be on November. I've already switched over to November on the micros. Yeah. So I'm just gonna let this trade around a little bit. Let's go and take a look at the charts. I mean, today is going to be, there's a lot going on today, right? So treasuries here, we're moving up. This is still like within yesterday's range. It really seems to me like the market kind of likes this 106 spot, but we'll see. Okay, there's a big stack there at 09. It's kind of following it up. That's curious. S&P 500 pretty flat overnight. So markets do look like they're kind of in the wait for the FOMC mood. Oil took a little bit of a plunge later in the day, but they're already recovering that. Gold and silver also taking a bit of a plunge yesterday, but that's still just kind of like in line, coming back to in line with where they were before with the longer term trend. Bitcoin continues to go sideways after a pretty big jump between the weekend of the 20th and the 24th. And the dollar looking pretty strong again today, up above 106.5. That long was just as the news came out. I saw a large and thought, why would they buy so much? So it must be going higher. Oh, you got out at 9.5. Well, good job. There was something happened there for sure. Okay, so they're pushing the highs again. Oh, wow. So I just looked at it. It was like, okay, we're at 485. We're already basically 2 basis points lower. That's very, very curious. You're getting a pretty wild trend off of this one. I mean, I suppose I could just be in here trying to catch it along with the trend, but I'm concerned about the depth of pullbacks here. Also, although one thing that could be, so StockTwits is just pointing out private sector payrolls 113,000 versus 150,000. That number is kind of like sketchy, okay? Just so you know, the ability for that to predict the non-farms number on Friday is not very good. And I don't know if I trust either of those numbers really to give me a very good view of what's going on. But there's a pretty big change. We've kind of been expecting some things to maybe like equalize on unemployment to come back in here. It seems to me this week that you actually have gotten a number of pretty solid tea leaves on the economic numbers front that suggests that the economy is weakening here. The economy is weakening. So, this trend up may be more than just the Treasury refunding announcement. How far they're actually going to go, I can't say. We're about 16,000 contracts net long now. I ask why you don't trade cryptos. So cryptocurrency market is largely a crapshoot. So the issue that you have in the cryptocurrency market compared to other markets, and particularly compared to like the market that I trade, which is the Treasury market, there are a lot of people out there in the Treasury market that have to transact, right? Like in order for their business to work, in order for their business to run, like banks, they have to buy and sell treasuries, right? And so based on a number of metrics and things that we can look at, there can be flows that are consistent over time and we can potentially predict, right? In the cryptocurrency market, that doesn't really exist. There was a time where people were using cryptocurrencies to make payments, to buy stuff online and that sort of a thing. But then in 2016, 2017, they changed Bitcoin, didn't allow them to increase the block size, and made the fees so high that basically all of the retailers gave up on that, right? So when it was no longer viable as a currency, what flows are you going to have? Who is it that has to buy or sell Bitcoin today, and I have enough information to be able to predict that that's what they're going to do. I don't. And so if you don't have that kind of information, then it's just a crapshoot. And that really is what it ends up being in the cryptocurrencies. One guy can move the entire market up or down. So every time in the last, I'm going to say year, so like almost all of this year, anytime that you see the cryptocurrency market going up, the next week you'll have Michael Saylor come out and say that he bought $1 billion more of it or something like that, right? This time around, I don't think it was Michael Saylor. It seems like there was a few hedge funds, maybe one or a few hedge funds that bought into Bitcoin and gold as a hedge because of concerns about geopolitical tensions in the Middle East. So that's probably why Bitcoin has gone up more recently. But, you know, somebody could come in and decide to sell $1 billion, and how are you going to predict that? You can't, right? You're at the mercy of the whales. You're at the mercy of something that you have absolutely no way to really predict. And so that's why I find that Bitcoin at this current time just ends up not being a very good instrument for day trading. What we really care about, the reason that we should trade one instrument over another instrument, is because of the edge that we have in that instrument. So my understanding of the treasury market, my ability to predict flows in the treasury market is stronger than that edge that I could find in other similar markets. Maybe if my career had been for an oil company or for a copper mining company, then it would make more sense for me to trade those commodities. But I've spent all of my time learning about the Federal Reserve and the treasury market and monetary policy, and so that's why I could come over here in the treasuries. And of course, the equities, because these things matter to the equities as well. But there's a lot of noise in equities, so I tend to avoid them. Even though we definitely have to keep track of them, and if you trade the S&P 500, you should still find this stream useful. Maybe you don't like such... Well, you know, the thing about cryptocurrencies, though, you have the ability to define your risk better than almost anywhere else, right? Because you can trade like a fraction of a Bitcoin. And there are even ways for them, you know, for you to set how much leverage you're going to do with it. You get order flow for basically free over there. So there are some advantages, right? But, you know, from that perspective, I don't think that you would want to day trade it, right? You would just take a long-term place. Now, I used to do that. I've made a couple $1,000s from the cryptocurrency markets, actually. A lot of that came from mining coins that then took off in 2017, and I took profits. So Sia coin probably being one of the biggest ones. But I also kind of, especially after the FTX thing, kind of came to the conclusion that I just didn't want to be involved in it. Even if there was some benefits to me, I just was tired of that whole market. You know, most of the people that are involved in the market, in the cryptocurrency market, are in denial about the fraud that's going on over there. They're in denial about the risks. They have ideas about what is going to happen in the world and to the financial system that I think are a little bit ridiculous. And so I just was kind of like, you know what? We just don't have to deal with that anymore. We just won't talk about cryptocurrencies. So I usually only discuss it when it's relevant. But my understanding is that my Carlet coin is doing well this week, though. Let's go look. Well, there's more efficiency. I think efficiency is the wrong word. I'm going to say there are more predictive signals in traditional markets. The Bitcoin market is not efficient in the least bit, but no market is. Okay. Garlic coin. Yeah, look at that. They're at 2 cents. When, like, you know, a couple of weeks ago, they were like sub 1 cent. Look at that. There's a big spike here. Somebody bought on the 21st. And then there's been some pretty consistent little spikes of buying up through here to get us to 02. That is one of the best rallies that they've had in, I'm going to say, in years. Let's see if I go back. Yeah. So it's not as big as this one that we had in the beginning of 2022. But then since the market died down, that's the best run that we've had. Now, maybe it's starting to go because the overall cryptocurrency market is starting to move up too. So that buying may actually represent some of the buying in Bitcoin that's happened over the past week and not demand specifically for garlic coin, but it looks pretty good. And with the way that that's going, you know, man, I always, when I really think my pie in the sky dreams about garlic coin, you know, like if the cryptocurrency market took off and people start seeing, you know, how much garlic coin is making, and then they start going in, there's not very much supply in garlic coin. There's not very much liquidity. And so if this thing took off, it would take off, you know. But actually, if it took off, it would actually kind of be a problem too, though, because no way for me to sell what I have. Not even close. They'd need to, like, list it on Coinbase or something like that. How much do I have? Enough that I can't tell you how much. Yum. I at 2 cents is not a significant amount. In your sheet, how much balance do you trade? I don't understand your question there. I think that the question is just like, how big of do I trade? I keep things really small right now. So, you know, I don't feel like that things in my personal life are very well set up for me to take on a ton of risk right now, unfortunately. So I've got 2 toddlers that just take a lot of attention away. So I'm not as focused as I'd like to be sometimes. But we're getting close. We're getting close to a place where I could start taking more significant risks. Although taking more significant risks might involve more buying individual stocks than it does taking bigger trades in the treasury market. But, you know, so when I come in here, I usually trade 1 micro contract and make 10 to 20 bucks on a trade. Make or lose 10 to 20 bucks. If I lose more than $50 in a day, then that's where I should be stopping, essentially. As a YouTuber, you can trade aggressive to show off. Yeah, but you know what? I'm not really interested in playing that game. I mean, if it happens, then cool, but I'm really not into this whole, like, make everything seem dramatic. I feel that gives you a perverse incentive that is, like, likely to lead you to doing stupid things. So did you seen this whole thing with, like, the sniper wolf that, like, she was, excuse me, like, the way that she got started was, like, by playing games and then making witty comments as she was playing the game and everything. And everybody said that she was faking it. And now we know for sure that she was faking it, that her boyfriend basically did all of the gameplay, and then she just recorded herself, and you know, he even told her what to say. And so they had an agreement that they jointly owned the YouTube channel, and then they broke up. And so now she is trying to do all of these things to get all of her revenue moved into a different channel so that she doesn't have to share the revenue with him. But he says that legally he owns 50% of the business, so they're having like a legal fight, right? And meanwhile, she's been making all of these videos that are just like reacting to other people's content, essentially. And she's one of the worst offenders of this. So like she'll get all of the views and the YouTube revenue because people will come and watch her reaction rather than going and watching the original video. And so there was this YouTuber who really doesn't like that and made some videos about it. And so she goes about and starts harassing him. And so you can see how it's like the incentive for her is like to make the lowest effort content possible. To make the lowest effort content possible that like really shocks people and like really brings the views in, you know? And then when somebody points out how stupid that is, she goes and starts harassing them. So what has happened? That's like all of her incentives are aligned in that direction. And I don't want to be that way. Like, I can be conscious about what I'm doing in the content that I'm making, but there's those unconscious sort of incentives that can drive you. That's where like people usually do the thing that is most beneficial to them. And then they'll make up excuses for why they're doing that afterwards. So I think that it's better for me and my goals, which is to become the best trader possible and to build this community up and to become the strongest community so that we can develop an edge from having a strong community. That's my primary goal. And chasing after the big YouTube shock factor, I think would harm those primary goals of mine. And so I want to keep things where my incentives are aligned in the direction that I actually want to go with my goals so that I'm not tempted to go the wrong way, you know? So I kind of have just ignored those sorts of things. That's part of the reason why I got rid of the affiliate links for funded trader programs. So the success rate on the funded trader programs is incredibly low. It's incredibly low. The vast majority of people fail the combines. Of the people that fail the combines, they usually lose the account within 6 months. And we're talking about like a 95% ratio. So that doesn't mean that there's not ever a reason that you would want to do a funded trader program. If you're really confident you have a strategy that can go through and do it, then it might be worth it. If you really want to do something risky and you don't want to risk your own capital doing it, then it could be worth it. But, you know, I didn't want to be in the position where I was benefiting and had an incentive to push those programs because I ultimately do not feel that those are the best thing for traders. So I got rid of the affiliate link, and I've had people since then. I've had actually 3 or 4 different funded trader programs come and want me to push the affiliate link on the channel. I just told them no. Should you erase your channel on the premise that 95% of traders lose? Well, so if the premise of my channel was that this is a really great way to make a living and that everybody should come in and trade because if they do what I tell them to, they're going to be rich. If that's what I was saying and that was the goals of the channel, then I probably should delete the channel, right? But that's not what I say, right? What I say is that I'm interested in the markets and in becoming the best trader possible, and I'm pretty open with people about that. most people aren't going to make money from doing this, and that you should probably only be doing it if you're just really obsessed with the markets and you want to be as involved as possible, right? I haven't seen the new Top Stuff software and tilt indicator. I saw, though, I was thinking about the funded trader program stuff this morning because I think it was Tom Hoagland. This is like a famous, well-known, profitable trader. And he basically said, look, I have inside industry contacts, and they say that 95% of people fail these. So he says that it's not a good deal. And then he talked about, with the way that the drawdown is built and everything, you're basically guaranteed to fail at some point. That, with the leverage that they're giving you, that a 5% to 10% drawdown is within a year is pretty much expected, and that will always break their account rules. So the profit that they're looking for is too high, and the risk that they're asking you to hold is too tight for that level of a win. So, and I agree with him. I think that when I started this channel, they made sense, because when I started this channel, basically you could trade E-minis or ZN, but you probably want to have like $5,000 in an account minimum to trade. To really trade like realistically. And so then the funded trader programs made sense, because for $150 you could actually trade, because otherwise you wouldn't be able to trade at all. But now that we have like micro treasury yield futures, which you can come in and fund an account, minimum I think you can fund for $400 or $500 now, right? That'll get you in, and then you can like trade sim. And if you want to trade live, you can just trade one treasury yield contract, and you can, if you have a $500 to $1,000 account, that'll last you multiple years if you're doing things right. And so then the funded trader program doesn't make sense at all, because basically if you fail the funded account 3 times, then you could have just gotten a live account, right? So now it just straight up doesn't make sense unless you're doing something really risky, and you think, well, this strategy will eventually bust, but I can make money for 6 months on it and pull money out of the account before I bust, right? That's the only situation where I really feel like that they make sense anymore. Yeah, I think that that's an accurate assessment. Uzi from chat says, when you started this channel, you had the big eyes for day trading. After time, you realize it's just about impossible. So now you focus on the market mechanics. That's real talk. I mean, I would say that when I started the channel, I did know what I was up against, because I had spoken to people. I had a much better idea going into this what to expect. Okay, so I didn't have the same kind of illusions I think that most people did, that I was going to make a living from it per se. But I thought that I would do better than I have, let's say. Yeah. But it's also that it's not like it's like just about impossible. It's kind of like to have the kind of consistency and progress and amount of success to keep you going and stuff. You really have to be pretty tight with your trading, and so the amount that you're making is not necessarily that much, right? Like that's the whole thing, is that like you're maybe making like a risk-free rate of return, maybe. Unless you're doing something really risky. So people who come here looking for strategies and success day trading or pitching in the dark, you won't find it. You basically learn how the engine works. Well, I wouldn't necessarily say that. I think that the information on this channel, if you are serious, you watch all of the videos on this channel, you come into the stream every day for a couple of months, maybe you sim trade for a year first, because you kind of have to get an idea of like how the market changes over the course of a year and that sort of a thing. Okay. But once you've gone through all of that and you have enough money to start where you can buy the software, get a News Squawk subscription, and fund like $1,000 account, you should be able to come in here and at least pay for your costs. I think with the information that we have here, that you should be able to get yourself to a point where you're paying for your costs, right? And there is additional edge beyond that mostly has to do with like flows that I'm expecting that day and stuff that I've read that I don't always necessarily talk about directly, because that's part of my edge. Trading micro futures is a hobby. Yeah, I think of it as a hobby. I mean, the thing is that the crazy thing is that I really feel like that the real edge, like the real money that you make from it, isn't from the trading, but from everything else that you learn about the market. Because I've made hundreds of thousands of dollars basically on my house that I wouldn't have otherwise if I didn't know so much about the interest rate market, you know? I've invested significantly more money than my peers into my tax advantaged accounts that I wouldn't have done if it hadn't had this interest. So there are still real benefits to it. But ultimately the only reason why I'm saying all this sort of stuff is because I don't want some newbie to come in and put $20,000 into the market and then lose it in a month, because I've seen people do that, right? And they do that because they think that that's going to be their ticket. And I don't want you to do this if you think that that's going to be your ticket. I want you to do this if you enjoy it, right? And I mean, you really have to enjoy it. I mean, like, you're obsessed with this, right? If you're a little bit autistic and you're obsessed with this, then this is the place for you, right? And then on that point, a lot of my content is geared towards giving you the tools that you need to be able to find those actual edges that I'm talking about, the things that would give you an edge beyond just, an edge beyond breaking even, essentially. Oh man, what do you think? I just answered the prop firm's question, so I don't think I'm going to go into it again. I don't like them. I think you should start your own account. Yeah, I started with $20,000 and I lost it on home remodels before I lost it trading. That's funny, dude. Yeah. I don't know. But sorry, you said one thing though, Uzi, that kind of like rubbed me the wrong way, and it's because it doesn't really address the key problem with the markets, okay, which is this. Because we have edge. I'm not going to say that I have edge every day, but there is definitely some real edge that you can glean when you're watching this stream. Right, when we know what's going on in the market and we have an edge, like, man, it can just be absolutely magical, right? I'm finding this action that we're having right now a little bit interesting too, by the way, because I saw it go off and I was like, wow, that really moved, but I was like, no, I'm not going to trade it. It came all the way back. We have a Federal Reserve Day, and again in an hour we have PMIs, so I feel like that I made the right call on that one. Anyways, so there is like significant edge. The problem is that the market constantly changes, right? And so it's not enough just to know like, oh, here's this pattern that tends to work, because that doesn't work, right? That the market will adjust to itself, right? You have to have the ability to find new edges, essentially. Like, you have to be able to do the research, and if you're going to do technicals, be able to do the research and find a stylized behavior of markets that can make you money and is actually consistent. You need the tools to be able to tell that you're not just being fooled by randomness. That's one of the things that we give you. You need to have the tools to be able to know where to look to find informational edges. That's part of the tools that we give you, right? And so the reality is, one might think, oh, well, if I'm not going to find edge here, maybe I can go to this other stream, and then they claim that they have this pattern that I can trade that's going to give me edge, and I can go and do that. And the thing that I'm trying to say is that you're never going to find an edge in that manner because of the competitive nature of the market. And that, I think, is a very, very, that's like one of the most important things if you're going to get into trading that you need to understand, is that the market is competitive. You are competing with, if there's an inefficiency out there, you're competing with everybody else out there to grab that edge before everybody else does. And that affects how you have to approach this beast. Your stream with value will depend on what stage of the journey a given audience member is in. No. I think that there is an edge in it for people at every stage, but it's going to change, right? If you're a beginner, then I give you all of the information that you need to get started trading, right? If you have your setup and you got everything going, then I'm giving you the tools to help you actually like analyze the market correctly, so that you're like not wasting your time by coming up with incorrect conclusions and going down this big long path before you realize that's not really the way it works and having to go all the way back, right? And then if you're a pro, then you get the benefit of the collaboration. And my objective is to get everybody to the pro level. So, and I would consider Lucas experience, I would consider Uzi experience, right? And they will mention things from time to time, and we collaborate. And I think that we all gain edge from that collaboration, right? So there's different levels, but I think there's something for everybody. Just realize that it's not going to be, I give you the pattern and you go and trade it and you'll be forever profitable. That will never work. And nobody will ever be able to give that to you. It's contrary to the very game that we're playing. I bought Al Brooks' course and it took me months to finish, and you're kind of regretting it now? Dude, is it really that long of a course? I tell you what, the Al Brooks stuff is just one of the things that I see in Al Brooks' content is that it seems like it's extremely esoteric on purpose, which is to say that he has his own terminology in his own set of things that he says that he's paying attention to, so that when you're new and you're coming in, it seems like there's so much to gain from him. But then if you actually go through all of the content, at the end of the day, you kind of realize like you haven't actually gained anything, because there's nothing verifiable about anything that he says, essentially, right? Like if you ever had these stats and these studies, like that's the thing that I say really differentiates my channel from other gurus out there. I don't really like calling myself a guru, but other educators out there on YouTube, is that when I make a video, I have empirically backed evidence to show you, essentially, so that you can know that the thing I'm telling you about the market is actually true. As opposed to most other people, they're creating a model that they want you to follow and adhere to, but there's absolutely no proof other than their own claimed success that they'll never show us as to whether or not it's actually an effective model. Yeah, there you go. Most people Get into this for the illusion they're sold on the internet. Your content should be valuable to the newbie, but the newbie won't realize it until after they've done their Holy Grail test. That might be true. It may be the case that you'd be very difficult to convince people of these things until they've tried and failed a few times. I think so. You know, I wonder, because one of the things that I've always been very proud of is that we have a very dedicated and consistent community here. The number of people that view the stream is incredibly consistent. It's just like the same 24 people or so every day. And if it was most channels, that's not going to be the case. You're going to have people moving in and out constantly. And because there's a lot of turnover, we don't have as much turnover. We have people that have been in this game as long as I have, for like 5 years or more. And why is that? Well, I think part of it is because, you know, we have that group of people that haven't had those illusions, right? But I also wonder if it's just that we tend to attract the people that have already been beaten up a little bit, you know, that have already been through that journey, and the newbies that aren't as interested. You like listening to me go on a rant? Well, that's interesting, because sometimes I wonder if when I go on the rants, if that hurts me and that you guys don't like it. Okay, so wait, I need to go back here. Lucas was saying, no, you answered the Combine account, not the prop shop. Well, I think he was talking about Combines. Prop shop is a different thing. My understanding is that SMB Capital does make some money, but I don't think that the prop shop model really makes sense anymore the way that it used to. So I'm not going to say that they're like scams or anything like that, but was there something else I missed? I have a full-time job loading crude oil and rail cars. My main interest in the stock market is investing, but day trading is oh, I didn't know that. Look, Alan, I want to make note of that, because you know, that is something that, you know, would mean that you would be able to answer certain kinds of questions that could be really valuable at some point, right? Here's my little spreadsheet. Oh, Gunman said, yeah, I was talking about combines. You know, I have some videos where I go like way deeper into it, so you can kind of go back and see like my whole kind of progression through it. Yeah, same. I mean, it's the same with Axia. Like, so I think it's kind of telling. So I got to be really careful here, because I don't want you to come with the wrong impression of what I'm saying. I really like Axia, okay? And I like the guys over there. You know, I'm not down with everything that they teach, but I think in general they're a force for good in the trading space, okay? But I think it's telling that before Axia there was Futex, and that Futex basically went under, and that when they restarted and built Axia, that a major factor or a major pillar of the business was having the classes and having the subscriptions and the ability to watch them and all of that sort of thing, instead of them just only prop trading, right? So again, like the prop trading model, I do not feel that the prop trading model makes as much sense as it did like in the 90s and 2000s. Like a lot of it is that, you know, back then it took a lot to even be involved in the markets, right? Like to have access to the data that we have and to the software and all of that sort of a stuff, it was expensive. And so prop firms like really made sense. Now it's like, okay, you have all of that stuff on your own. So why do you go to a prop firm versus trading on your own? Right? The only reason would be that the prop firm provides you some sort of an edge that you couldn't get otherwise, or you don't have enough capital to trade. And then the question is, okay, what is that edge that Axie is giving you beyond the education that you got? Right? So I think the reality is that the edge that they can provide as a prop trading firm now is quite limited. Having edge means you can generate alpha and we can't. Well, I mean, it depends on the scope of how you're using the term, right? Because when part of the thing that I'm saying is that the edge that you have can change from day to day, right? Because if you know something, then you know something, and if you don't, you don't, essentially. Now, will that consistently generate alpha year after year? Well, then that's kind of the big question. That's kind of up to you to prove. I talk to people who work there and they all say they are pretty secretive about what they do and leave you to figure out things on your own. Yeah. Like, and that's kind of why I was trying to be, a little bit diplomatic about what I'm saying, because I do think that they have some good content, but I would not say that you can just go and watch any video on Axia and treat it as the golden truth and as information that will help you in the market. You're going to have to treat their content with as much skepticism and research on your own as any other source. Because I mean, a lot of this is you just got to become a good filter, right? Because there's so much content out there in the trading space. Most of it is nonsense. So you have to be really good at being able to prove things with the market and then use the information that you have proven to be able to discern the other information that you get in order to be able to find that daily edge, essentially. But interestingly enough, there is one guy there that my understanding has been incredibly successful. And as far as I can tell, what he's doing is he's trading large news events, and then otherwise he's just maybe scalping in range. What I've been told is they give you the same process some of the big shots use to trade and leave you to adapt to your own chart. Like, if I tell you to buy, sell, the bid-ask spread, now good luck making money. Yeah. Totally, I get you. Yeah. But I mean, I think that's the fundamental problem with like the puzzle. I think that there's like a fundamental puzzle in trading that has a pretty simple answer. And the puzzle is, how do you find an edge? And the way that most people try and solve this problem is look at somebody who has had success and then just do what they do. Because humans are social learnings. Humans are very aggressively social animals, right? And we watch other people to know what to do. That's what we're all about. And that just doesn't work in trading. The solution to the puzzle is you have to do the research and figure it out on your own or within that small group, because if everybody knows it, then it's not an edge anymore. So you have to develop all of the skills to be able to sift through all this information and find the information that's good, and to be able to do an actual analysis on the market on your own and discover this kind of information on your own instead of having to rely on somebody else discovering it and then sharing it with you. Well, it looks like the market has maybe finally found a spot at 08. And that puts rates right back where I was talking about at 485. So 485 is an interesting area to me. Let's see here. And the overall volume from that thing, I think, kind of came out too. So I don't think that I have a really strong bias as to whether we go up or down until we get to those PMIs in 45 minutes. I feel like that there was something else, like a whole other segue that we didn't get into. I guess the thing that kind of got me started is that I just don't like the direction that I see a lot of social media and the internet going. I think that what has happened in our society over the last 100 years or so with the advent of mass media is that we became so obsessed with the worldwide communication, the ability to go in and tweet and everybody in the world to be able to see it, that we lost sight of the thing that we have in our society that really works well, and that is small communities. Small communities are very, very strong, and you can have very strong relationships, very fulfilling relationships. I find the the interactions that I have with you guys here on stream with just a small stream, I find those to be very, very fulfilling. Like, I don't know what I would do with myself if we weren't doing this every day, you know? Like, I think I would feel very, very empty. And I have to spend more time with family. Basically. Right? Like small communities work really, really well in humans. And everything has been pushing people away for, like, ignoring small communities and trying to interact as this giant mob on a global level, and it just doesn't work very well. Those block trades at yesterday's high took too long to break. Oh, what was where? So let's see here. Where are you talking about? You must be talking about the equity market. 42.12. Still got 10 minutes to the open, so. Rant, baby, rant. Oh, there you go. Yep. I don't know. It's kind of just a different approach to things, right? Like, as an example, with this Palestinian-Israeli conflict, right? A lot of people are having all of these discussions about, like, who was there first and who's been the most oppressive, and, like, is this action okay or this action okay, etc., etc. I think that that's the wrong approach. Because that approach doesn't really take into account the tribal nature of people. So I think that the real approach to really understand that conflict is to think of it as a geopolitical conflict between two civilizations, right? And you have the Western world and Israel on one side, and you've got the Muslim world on the other side. And the reason that the Western world supports Israel is because that's part of their civilization, and the Muslim world will support Hamas because they're Muslim, and that's all there is to it. And there's no, like, all of these arguments that people are making underneath of the surface, you might think that they're all logical and everything, but in the end, the reason that people are taking the sides that they are is because of where they think about those civilizations, right? Which is why it's a little disturbing to see a lot of people like supporting Hamas and stuff like that, right? Because it's ultimately like approaching it from like groups, right? From my perspective, you want to win, basically. If you want your civilization to continue and to be a driving source in the world, and if you think that it's generally a positive thing, then you want them to win. I don't think that you want a caliphate to control the world. Do you? Does anybody want a caliphate to control the world? I don't think that there's anybody here on the stream that does. Right. So if that's what you think, then I would say go in and win. Right. Destroy Hamas and then turn that place into a good place, instead of allowing this nonsense to continue. Right. I think that's the approach you have to take. And Hamas's approach is basically like they know that they can't win, so they have to try and convince you to lose, right? They have to try and become so sympathetic. So the one that oh my gosh, this one pissed me off. Is yesterday there was all these reports, and it was on Zero Hedge too. You'd think that like people consider Zero Hedge like a conservative news source. It's not. There's actually nothing conservative about it. It more often aligns with conservative these days, but it's not actually conservative. And one of the ways that you can see that is that they're kind of anti-Israel. Really, they're anti any global conflict, I suppose you could say. But so they were pushing this story yesterday that the Israelis bombed a refugee camp, which is just actually false. Apparently, what happened was the Israelis bombed a Hamas leader and killed the Hamas leader, and then secondary explosions triggered down through the tunnels and exploded ordnance that Hamas was hiding under the refugee camp. So it really was Hamas's fault for hiding munitions in refugee camps. Isn't that just sick and disgusting? And then they try and turn around and make it Israel's fault, saying that Israel bombed a camp. Well, this is not just absolutely not true. They were bombing like a block away, and secondary explosions triggered down through the tunnels. Right? They have to generate enough sympathy to convince you to lose, essentially. That's what's really going on, guys. There's your rant. There's your rant. I feel like I'm stepping on glass, but there's your rant. Oh, it's still got 4 minutes to the S&P 500 open. Let me check a few things here. Okay. Oh geez, world's largest offshore wind farm developer abandons 2 major U.S. projects as renewable bust erupts. That's kind of a short one. Come on, you're better than that. I don't know. That was I mean, yesterday was Halloween, so I guess I'm kind of like, we're kind of like in having a little bit of a reset here, right? We're at the beginning of a new cycle of things. We'll see where it goes. Well, you're seeing the dollar is looking really strong at the moment. It's not really pushing down on the treasuries as much as it normally does. That's actually really, really odd, because in the last 30 minutes, you've really seen the Japanese yen decline and the treasuries aren't following it. So when my correlations are all awry like that, that's kind of a big warning signal that this might not be the best market for us, but that we need to kind of stay vigilant, because it could very quickly turn into a good market for us. Can you go on the rant and being satanic? I'm not a huge fan of Halloween, to be honest with you. Maybe this is like an ADHD trait, but this desire to pretend to be something else for a day does not appeal to me in the least bit. To me, it's just extra work. Like, I gotta go and put together a costume. I've got to go and put together a party, all this other stuff. For the kid, it's cool for the kids, right? Like, I like to go and watch the kids trick or treat, and for them to learn and understand the culture and the tradition behind it and stuff like that, right? But I'm not going to dress up. I'm not going to dress up. Why do you insist on saying that? I don't know if that means that I'm a better person. I'm just saying it's an unusual trait, right? It seems like that one of the traits that you will see with ADHD autistic spectrum people is like they despise anything that might not be 100% genuine to themselves, if that makes sense. So, like, you know, if you go and you buy them a shirt and it's not the same kind of a shirt that they typically wear, they just will refuse to wear it, right? Does not make them better. I'm shopping for a new broker. You are in. Well, I don't know if I would say I am a customer of EdgeClear. Correct. Yes, and I'm very happy with them. So. Man, the broker question is such a hard one, right? Because if things are going well, you never need them, right? But I think that I really like the people that I've spoken to over there. Anytime that I have a problem, they give, you know, good support. Like, the people that are fixing things actually understand what's going on. It's not just some kid that's only worked there for 3 months, and these are people that are like really involved in markets and know what's going on, right? Have you tried? Yes, I have. What were you? Yeah, I think you could go back and you could find some streams where we did go through that. I'd say it's a good platform, or rather, it's a sufficient platform. Again, it's kind of like there's a bunch of these ones like Quant Tower, Edge Pro X. I'd put in that thing. ATAS. So Edge Pro X is I forget what the name of the platform is that they're derived from. I forget what they're derived from. Yeah, it's better than the NinjaTrader 8 one, at least, yeah. I think it has the middle columns. I can't 100% recall. Now, you do have to pay for it. I think it's like $20 a month. So, like, I don't know. So like, for instance, if you already own a Jigsaw license and it was the difference between paying the monthly trading fee for Jigsaw versus Edge Pro X, I think I would rather pay them the extra $20, $30 for Jigsaw, right? But the thing that's cool about EdgeClear is that you can use all of those platforms, right? So if you want to use ATAS, etc., etc. You say this is turning into a good... if you say so. I'm not too happy with the activity in the treasuries here so far. It kind of looks like that they're going to chill in this area until the PMIs. There was a good... I mean, we did have a good rise after the Treasury refunding announcement and everything in the S&P 500. Actually, was that initial jump up? Was that because of... Was that at... Yeah, it was at 630. So that was the Treasury refunding announcement. was going to say it at 15, I would have thought that that would have been a bigger jump for the equity market, but apparently not. But it seems that the interest rates have backed off a little bit, and that the equity market is happy that that's at the very least, that's not going to be a huge stumbling block for them. So I really, in the industry right now, I think that there's kind of like 3 or 4 directions, right? One direction is the NinjaTrader ecosystem. One direction is the Sierra Charts ecosystem. And then the other one is the independent ecosystem, right? So especially if you want to be in the independent ecosystem, I think EdgeClear is a really great way to go. Because, you know, obviously it's not as cheap as AMP futures, but I think that the support and what you get is a lot better. And it's still fairly competitive. But unfortunately, I don't think that I would go over to Edge Pro just for their Edge Pro X platform. But if you want to go with Edge Pro and you need a new platform and you want to pay their $20 a month or whatever it is, I think that Edge Pro X would be a reasonable platform, yes. I know it's really hard for me to judge like what is good in the S&P 500 and not. Like 10 points used to be like a really good move for me, and now it's just kind of like eh. So now that's just kind of noise over there. Well, the S&P 500 has been going for about 5 minutes now. Let's read this story from Zero Hedge about the quarterly refunding plan. Okay. We already knew after its publication on Monday that in the current quarter, the Treasury expected to issue $776 billion in debt in the current quarter, or some $76 billion below the previous forecast published last quarter. A welcome slowdown in debt issuance as a result of slightly higher than expected tax receipts in October. Today's Treasury refunding announcement gave the details of what the composition of this issuance would be, with a focus on coupon versus bill sales. Here's what we learned. Next week, the U.S. Treasury debt sales will total $112 billion, which, while an increase from the $103 unveiled in August, was less than the $114 billion anticipated by Wall Street bond dealers. It was the second straight boost to the so-called quarterly refunding, if slightly less than expected. The offering of $112 billion in coupons will refund approximately $102 billion of privately held Treasury notes maturing on November 5th, 2023. This issuance will raise new cash from private investors of approximately $9.8 billion. The securities are a 3-year note in the amount of $48 billion, up $2 billion from $46 billion in October. A 10-year note in the amount of $4 billion, up $5 billion from the $35 in October, and a 30-year bond in the amount of $24 billion on November 9th, up $3 billion. Treasury plans to increase both the new issue and reopening auction size of the 10-year note by $2 billion and the 30-year bond by $1 billion. The Treasury will maintain the 20-year bond new issue and reopening auction size, noting that Treasury issuance plans will continue to depend on a variety of factors, including the evolution of the fiscal outlook and the pace of and duration of future SOMA redemptions. Compared with the August refunding, the key difference this time was a slower pace of increases in the sales of 10 and 30-year securities, with 20-year bonds kept unchanged. In other words, they're putting more of it into the short-term ones because the interest rates aren't very good, right? The Treasury plans to increase the November and December reopening auction size of the 2-year FRM by $2 billion. Blah, blah. I don't know about these numbers mean any sense to anybody. The total of 112 billion compares with a peak of 126 billion reached in February of 2021. Auction sizes across the curve began rising in 2018 to finance tax cuts and surged in 2020 to finance pandemic response. Then, after dipping modestly in 2022, coupon issuance is once again rising and will continue to do so pretty much indefinitely unless the government learns to live within its means, which of course will never happen. The Treasury also specified that it now expects a single additional step up in quarterly issuance of long-term debt. All these changes will make substantial progress towards aligning auction sizes with projected borrowing needs. Treasury anticipates that one additional quarter of increases to coupon auction sizes will likely be needed beyond the increases announced today. A lot of this is them just saying the same thing. In a knee-jerk response, 10-year yields dropped to session lows, if rising modestly since after yesterday's refunding was slightly lower than most had expected. And it then kind of gave all of those gains back. Okay. Oh boy. Elon Musk was on Joe Rogan's podcast on Tuesday. The owner, Elon Musk, laid out how Twitter was acting as an arm of the government before he took over and was, quote, completely controlled by the far left. Yeah, we all knew that. Okay. Republicans were suppressed at 10 times the rate of Democrats? That's because the old Twitter was fundamentally controlled by the far left. It was like completely controlled. Yep, of course. Yeah. Remember when everybody told us, no, you're not being throttled. Your content just sucks on Twitter. Yeah. Well, there you go. There you go. Of course, now that Elon Musk is in charge of Twitter, I still suck at Twitter, so maybe my problem is the content that I put out on Twitter, huh? Yeah. Okay, so after the Treasury refunding announcement, Jim Iorio has asked this. I'm not positive that the Treasury's being kind of scared to sell long-end bonds is good news for markets. Thoughts? I don't know if it actually predicts anything, but it definitely kind of shows that they don't like the interest rates. What do you think about us copying your trades? So I don't think that trying to copy somebody else's trades is a very good idea. Like, the way that I trade is very specifically adapted to me. And so I intend you to be able to take the information that we're talking about and the things that you learn and adapt it to the way that you trade. I also don't really want people to follow me because that can kind of screw the trade up. Right. So there have been points where it seems like that the market will kind of fight us. So I'm really cautious about that. And that's why the way that I trade, the way that I talk about the trade, I kind of try and make it difficult for you to be able to copy. Like, I don't say if I'm going to buy or sell, I just I see the thing and then I go in and I get in. And then it's maybe like 5 minutes before I say anything. So if you weren't watching the screen, you wouldn't know that I had taken a trade. So I'm very paranoid about people copying the trades potentially affecting the trade in the market. Which I know seems silly, but yeah, I did see that. Joe Rogan shot the new Tesla truck with a 500 grain arrow, and it broke the arrow and chipped the broadhead, but barely put a dent in the side of the truck. Yeah. I don't know about this Cybertruck thing, man. It's just, that one's just too weird for me. I have like super mixed feelings about the vehicle market and trucks in general. Like I think that in the next 3 years I want to buy a truck, but like I feel like everybody around here has a truck, and I want to be unique, I guess. I guess that's what my problem is that I don't want to have the same car that everybody else does. Part of the thing was I thought I always wanted a Tacoma, but then my wife eventually wants to get like a trailer to pull around, and then it's like, well, it wouldn't be big enough. You need a bigger truck to pull the trailer. All right, fine. We're getting a little bit of a good trend here in the treasury. I would say it's a very gentle up, but enough consistency here to suggest maybe there's a large meta order going through in the 10-year treasury. So here's Alan Dershowitz. Was Israel justified in its attack on a refugee camp? That's not what happened. Stop saying that. They didn't attack a refugee camp. To reset things here, by the way. Still seeing overall flattening in the curve, by the way. Oh man, there's another what's a company secret that you can share now because you don't work there anymore thread on Reddit. There was one of these last month. What? Bloomberg analyst David Sassower says Citadel may fail due to tighter financial conditions. Time to go long on meme stocks? No, that doesn't make sense to me. No, I don't do it full time. Yeah, I am a site reliability engineer. So, ooh, what was that? That last tick up seemed a little aggressive, don't you think? It's just like all of a sudden 5,000 contracts came through there. What was with that? Oh, today is a big holiday for Catholics? I'm a little like now there's some big stacks there. You know, if it wasn't so close to the PMIs, I would maybe be trying to do something here. If not the thing trying to do something here being complaining about how I missed the trade. This move is a little kind of seems like it just popped out of nowhere because it's just like, and it's across the board too. Is there like some intervention in the Japanese yen happening here? Because the Japanese yen is coming back really aggressively. The dollar is falling here. That could be Japanese yen intervention. I always think that maybe Japan is intervening, so I don't know. Wow. Imagine the balls it takes to bid 3K at the day's highs, right? I mean, I can think of two theories. One is the Bank of Japan did not like what the currencies were doing there and decided to intervene on, you know, the volatility, quote unquote. Or two, somebody is trying to front run the PMIs that are going to come in 10 minutes here. Or number three, somebody had gone short and it had to puke. Market maker ended up being short and had to puke there. But I would say the timing of it and the aggressiveness of it is extremely unusual, yes. But I did kind of note earlier, I was like, well, I didn't really like the way that the market was going back when it was at like 09, but that could shift very quickly. It did. So yeah, anything can happen quickly. I'm definitely not going to. I don't know why, but I keep getting stuck in. I get in a position, and then I want to be in the position through the news. I don't want to do that. This could be a really important number. So, you know, let's see here. U.S. ISM. Oh, we get Jolt's job openings too, huh? So Jolt's jobs openings, they're expecting 9.4 million versus a previous reading of 9.6. And remember that 9.6 was like a big shift from 10 before, I believe, right? U.S. ISM manufacturing PMI 49. Prices paid 45, they're expecting. So this is going to move the market. Like this news, I'd say it's pretty top tier economic news, generally speaking, right now. I wouldn't say PMI is always kind of more of a B tier, or if we say S is like FOMC and non-farms, right? Then I guess you could consider PMIs like an A tier news event. But, you know, So they're going to pull, and this is going to move when it happens. And it could directly contradict that whole trend up. In fact, I'd say that if like Jolt's job openings is higher than expected and manufacturing PMI is higher than expected, and like if all three of those are higher than expected, this could crater, and this last little move that we've had might make the decline even worse. So on the other hand, maybe they're trying to front run it, and they actually know that those numbers will be under expectations. Well, now that they're at 14, they're just kind of chilling here. And the big bids are gone too, by the way. I kind of hope it craters as you want more TLT. Man, we have to talk about TLT every day now, don't we? I was thinking about it like last night. Cause I kind of feel like, okay, I feel like that if you're in TLT, that the real scenario you'd be looking for is the economy like immediately craters within the next quarter, right? And the Federal Reserve is forced to reduce interest rates and everything. This is doing his job balancing my portfolio. Jeez. I know what that one's like. That's what silver has been for me until the last month. Before that, silver wasn't doing very well. But yeah, because I kind of feel like that if interest rates stay roughly where they are, like you'll maybe get some appreciation out of TLT, but not that much, you know? But it's kind of like I just get really apprehensive of seeing so much attention being paid to it, and a lot of people buying the calls. I know that they're cheap calls, but I kind of feel like that they're lotto tickets. I think the most likely scenario is that TLT just kind of performs mildly okay, and that it's not the buy the generational buy the dip because the treasury market's going to take off after that some people are trading it, you know? Yeah, you're hoarding it. But like, what if interest rates stay around here for like 10 years? Like, because that's what I'm kind of saying. Like, I think that we might get a recession in the next year, but that interest rates will just come back to like 2.5. I don't think that they'll go back to 0. So this 40% winner that it seems like some people are going for, I don't think is going to happen. Well, it pays you every month. Oh, that's good. So I read a story yesterday that kind of surprised me. They said that millennials had 40% of their wealth in the bond market and in bond ETFs. Well, okay. If you're following the rule about how much of your portfolio should be in bonds versus stocks, and you're 40 years old, you basically like 1% for every year. So 40% is actually probably what it should be. But I was just really surprised because I would have thought that most millennials seem like that they're not invested in the markets at all, and if they are, that they would just be in the S&P 500. But apparently they are using the target date funds or something like that. I don't know, the way that is kind of, when it ticks at 14, that sure seems like something that's still under pressure and people want to go to highs. But we got 2 minutes to the news. Your total is 24%? I had them when they were doing really well. Like way back in the day. And then I kind of switched back over to only putting them in equities. I suppose that I could start moving towards balancing it back out again. So where I work right now, you don't get the 401k until you've been around for like 6 months, and then you can only get in every quarter. So I think it might not be until January that I have a 401k over there. So I don't need to do anything about it yet, but I have to decide if I want to keep putting it all into equities or if I want to have a more evenly distributed one now. So there's the poll. And they seems like they maybe took advantage of that to push things a little higher. One of these, yeah, I think this news is going to be like, boosh. I think we might be surprised. Okay, there you go. Yep. Okay, so Jolts was higher than anticipated at 9.553, but ISM was lower than expected at 46.7 versus an expected 49. And prices paid was 45.1 versus 45. So I would say that was good for the treasury market. Maybe not as good as how much they moved. Holy cow. Whoa, they touched almost 24, so that was like 10 ticks? Really? Really? That was a move, wasn't it? I'm going to be careful with this one now, though, because what do you think the chances are that buying going into the news was them front running it? So is there really going to be more buying coming in after this? And it's struggling a little bit more than usual. Like, it came back very quickly, and now it's kind of, there's a lot of fight there at 19.5. I suppose if I wanted to go for a continuation sort of a trade, that would be as good of a spot as any. Geez, the Japanese yen and the dollar spiked hard. Dollar went from 106.7 to 106.47 on my chart. Yeah, the dollar took a big hit. Gold and silver also. Gold spiking above $2,000. They're back below it now. But for a moment there, gold was above $2,000. So that was a big one. Any plans to go to Turkey to get some hair? What? Is that is there like some sort of hair restoration place in Turkey that's super cheap and lots of people are going there? Like, I don't think I want the hair. I know it would just be more work. I'm pretty happy being bald, actually. I do need to shave though. The back of my head is getting a little fuzzy. Although I'm kind of, I'm a little bit longer than usual right now. It looks like it's going to be a really cold winter, so maybe I should just keep the horseshoe in the beard, for the warmth. Okay, so seems like they've kind of built out the spot here at 20.5. It looks like my treasury in NinjaTrader is broken. So I'm going to try reloading the historical data, and if that doesn't work, I'll just restart NinjaTrader. And I'm not liking that because I can't see what the deltas are now. And it looks like it's stuck because it's still trying to do tick replay. Wait, how much data do I have on that series? Can't be that much. 7 days? I don't know. I'm gonna restart NinjaTrader. I'm not liking what I'm seeing. Yeah, it's definitely hung because I just tried to kill it and it's not restarting. It's cheaper to get a hair transplant surgery in Turkey. A friend of mine went there and I'm kind of considering going. Yeah, I kind of come back to like what drives you, Well, I'm married, I have kids. My wife is okay with me being bald. I don't really see a reason to get a hair transplant. Something that has happened to me many times is like, I'll make a TikTok, and somebody takes issue with it or whatever. And so I've had maybe 2 times where another content creator tried to harass me. And they always go after that I'm bald. And I'm like, okay. Like, maybe you're insecure about it, but I don't care. Can we see? What do you mean by can we see your account name? I'm not going to show you the full account number. So if you look over here, I know it can be hard to see unless you like have the screen fully big and everything. But at the top of the DOM window, you can see the instrument that you're trading and then a dash and then the account. So if the account number starts with, I only show the first digit. Oh, we can, I see what you mean. Anyways, if the first number is a number, then that means that it's activated. He's saying you can see this right here. Yeah, that's okay. We just move that over here. That probably is a good idea. Okay, so what do we do about this one? Oh, this is very interesting. You know what? I think I want to read. Let's see if Zero Hedge has a story up yet. They might not, but... Oh, here we go. Okay. After the unexpected rise in September, expectations were for October's manufacturing surveys to hold their gains around the 49 to 50 level, despite the recent collapse in, quote, hard macro data. Sure enough, S&P Global's manufacturing PMI printed 50 final for October. But ISM's manufacturing survey printed well below expectations at 46.7 versus a 49, which is a contraction, by the way. The PMI survey highlighted that demand conditions were historically muted overall, with firms downwardly adjusting their output expectations for the year ahead and cutting employment for the first time since July of 2020. ISM warns that the October reading corresponds to a change of minus 0.7% in the real GDP on an annualized basis. New orders and employment fell as prices rose. October PMI data signaled a stabilization of U.S. manufacturing conditions amid a renewed rise in new order inflows and firmer output growth. Demand conditions reportedly showed signs of improvement as customer interest revived, but this was once again largely focused on the domestic market as new export orders fell at a quicker rate. However, it was not all good news. Backlogs down, jobs down, output expectations down, inflation up. Of concern were reports of dwindling backlogs of work previously used to help support production, as firms also revised down their expectations for future output to the lowest in 2023 so far. At the same time, manufacturers cut employment for the first time in over 3 years, as workloads were reportedly insufficient to warrant additional hiring or the replacement of voluntary leavers. On the price front, manufacturers saw a sharper increases in costs and output charges as inflation regained some momentum in the sector. Higher oil and oil-derived input prices again spurred hikes as rates of inflation accelerated for the third month running. Finally, we note that with a 6-month lag or so, U.S. manufacturing surveys have been following the path of financial conditions. 6 months after financial conditions began to ease last year, manufacturing surveys started to pick up. But as the chart shows, the recent aggressive tightening of financial conditions suggests the sentiment surveys are about to run out of their upside steam. Will that slower growth be accompanied by slowing inflation? For now, inflation expectations are on the rise once again. So, So that is quite a conundrum. Basically, they're saying that the economy is weakening, but there's still enough concern in inflation numbers to kind of stay the Federal Reserve's hand. Great opportunity short so that you have space when the Fed... You're right. Being called bald seems to be the first comeback in every argument Oh no, it's so dumb. You know who I really feel bad for are short guys, right? So it's like, if you're short, like you're not taken seriously, it's ridiculous. I'm average height, but sometimes I'm treated like I'm short because I'm still, I am a very light build. So like, I'm like tall and lanky, but I'm like a short, tall, and lanky person, which makes me average height. If that makes sense. Probably medications I took as a kid make me a little shorter than I wouldn't actually normally be. Also, what was I thinking about here? So, the issue that I have here, I guess, is that given that the data is stagflationary, I'm not sure if that justifies buying quite as aggressively as the market did. So, I don't think that I can look for the continuation trade based off of what I know, based on what I know about the numbers and what the order flow has been here so far today, because we are about a net 20,000 contracts long from the bottom here. You know, I'm skeptical about their ability to keep buying this. So I don't really like taking the counter trend trade too, but so I'm just going to kind of wait a little bit and see if they start to falter, if the buying starts to falter or not. So right now, I'm still seeing the buying come through long. Oh, I know what I was thinking about. I felt like my chair is too far back. Yeah. Force me to sit up straight for a little while. Actually, no, let's not do that. Let's tighten the tension. There we go. That's a little better, I think. What time will the FOMC? Yeah, it's around 12 my time. So it will be it's 2 o'clock Eastern time. Or what? 8? 6, 8? No, I think it's 8 GMT. Well, they're still pressing the upside here, man. Okay. So there's a little take. The bid doesn't look incredibly strong to be able to continue that through, but we might get a level break setup sort of thing here. Oh, no, yes, it's basically it's at 12. So the FOMC will be in 4 hours from now. Four hours from now. Yeah, there you go. Okay, you're getting some iceberging on the offer at 23 instead of the level break setup. So I guess we're going to find out how many buyers there actually are. That could be something that kind of stops them, though. You got to be careful about just like seeing 4,000 and like going straight up short, because that they could like just come back through and bust right through that, right? But for the time being, it seems like it's pushing them back the other way. It's making me feel a little nervous because I'm feeling like I should be taking a short here. Nah, I don't think I have. The flow is still very much to the long side there. I don't think that iceberg should be enough to get me into an opposite trade, but it's definitely a significant warning sign, I think. You can't even see the numbers. Yeah, I bet. As long as you get the audio, right? Wow, that was a strong uptick. It's not able to hold 22, but somebody's buying there. Okay. Interesting. They're pushing up. I'm seeing maybe a slight bit of steepening. Do you see how like the 30-year didn't get dragged back up with the rest of them? Do we have any studies that go into what the majority of the participants are for the ES? We already know that treasuries are 80% institutional. So I think that on occasion I have seen reports posted from banks and so forth where they try and do that sort of an analysis. I don't think that I would be able to find it now, but I remember when looking at the S&P 500 that it was like 30, 30, 30. It was like 30% of it was retail, 30% of it was one type of institution, and 30% of it was another type of institution. In the treasury market, yeah, most of it is probably, or at least in the treasury futures. Okay. Actually, so they're coming back up to that iceberg. I'm going to bet you that there's going to be more iceberging at 23 again. But let's see. There's 900 there. And down tick. You know, you're asking a really good question, Lucas, right? I think one of the key things is stuff like, can you go through the market every day and then see, there was a change in the amount of institutional versus retail trading that day and those sorts of things? That's the sort of stuff that if you were able to if you actually had the data to be able to determine that sort of stuff, would be extremely powerful information, right? You're going to pay a lot of money for that kind of information. Oh man, it looked like they were going to stop for a second, but they just stepped back up to the high there pretty easily. They're still being a little iffy about it, but it does kind of look like I was picking the wrong spot and that they're likely to reach a new high there. Yeah. Nothing too crazy though, and in fact quite a bit of iceberging on it, and they tick down. Well, I'm curious because if we have a higher degree of retail traders in ES, I might be interested in looking at levels and how the market reacts around that. Well, I would say that, like, in terms of levels in the ES, I would be a lot more interested in like previous day highs and lows and like 50, 100, 200 day moving averages. I do see some evidence that there's like reactions around those levels, but like this comes back to this bigger issue, which is like, how do you judge a line, right? Because you can come in and you can say, okay, if I take a trade at the line, does it tend to win or not? Well, probably it's not going to win. So, but it seems like it does something at the line. So is the line actually doing something? How can you tell? Like, how can you statistically measure how effective, how much the market, quote unquote, reacts to a line? I've never seen a good answer to that. Okay, well, the volume continues to come in long, but there is a lot more absorption against this one, so the market buying looks still fairly strong, but they are starting to struggle a little bit here. Well, if we get a higher degree of participation around a level, you can argue they're easier to trade, like picking a... Yeah? Well, what you could do is you could say, I'm more interested in putting bids and offers out when we're around that key level in the hopes that someone overpays. Yeah. I wouldn't be trying to like use the line itself to like make a prediction about whether we're going to buy or sell there, but it might be the case. You might be able to say, my bid or offer is like a bid or offer that's based off of some sort of a spread trade is more likely to get filled in those areas because the retail traders are willing to overpay for it. Maybe. I think that would still be a hard thing to test, but well, I did end up taking a little gamble there. It doesn't look like it's turning out for me, and then I'm gonna have to get out of this here now. Yeah. Okay, that was weird. I got out, but there was a lot of volume coming in the other way too. Weird. Very weird. I find the amount that the treasuries are pushing up here today to be a little alarming. I mean, we're at like 4.8 not that long ago, right? But this flow does not seem to be turning around like I thought maybe it was. It was a risky trade on that one, so I don't... It's making a lot of sense. Well... Oh, you're talking about the... might encounter stupid people and making stupid business. I think that the problem that you would have with trying to trade that, though, is that the action that you're going to get in that area is just going to be really random. So I don't know if you would be able to get a very good risk reward from it. So there are definitely some big offers here. But there's some big volume coming in. In fact, since the news, we're almost 30,000 contracts long. Oh, in fact, my news squawk is just telling me it's 15 basis points. I don't know. I really feel like that they should be taking a break here. But I suppose we could be into an unhinged market. Like this could just be like, well, I guess the thing that gives me pause is that it's an FOMC day. Look at that. The Japanese yen is really, really moving. Should I stop it? Should I go short 477 so that they reverse. Stupidity should... No, I don't know about that. I think that stupidity will just be more random. like just thinking about it from the perspective of like if I was doing this in treasuries, right? And if I said 27 was a key area, right? So like, oh, okay. I could hold a bid or an offer and say based off of my correlation, if somebody fills me on the bid, that's they're being dumb and I should be able to take it from 26.5 to 27. And what I'm saying is that those people are going to be so stupid that, you know, it could move like 4 to 8 ticks within that area randomly. And so it would be very hard to be able to like make it one tick. Right. Basically, you're choosing an area with a lot of noise. So if you're a big market maker, that's probably great. But if you're a small person trying to hold really tight risk, it's probably not very good. Can't say that whales are easier to read. I think that when you have information that predicts what the whales are going to do, I think that they are actually incredibly consistent. I don't think what we've got going on right now is I could call the whales. This looks more like a broken market to me. This looks like a, you know, everybody is now scrambling to get in long, which can result in some of the best trends, but you got to be careful in those because they can kind of sputter out and flip on themselves very quickly. So there was a big iceberg at 26. Okay, how did the whale manage to be a whale if its hands are so easy to read? Did he inherit the money? Yeah, so because you gave him the money to run his 401k index fund, right? Like, these funds, the reason that they're transacting are based on very simple rules, and they're trading like super long time frames and just rebalancing their portfolios and stuff. So they become extremely price insensitive, right? Like an index fund doesn't care what the price of the S&P 500 is. They only care that their composition remains equal to what the index is. And so, yes, they keep it a secret and everything, but, you know, if you know, and they tend to be really consistent about how they execute it. So when I'm talking about a whale, I'm not talking about like some big retail trader speculator, right? I'm talking about like index funds, risk parity funds, sovereign wealth funds. I'm talking about real whales. That price insensitivity throws through the market as noise. So what is noise is kind of a matter of perspective, right? So when we say it's noise, what that means is price movements that the model that we're using to trade can't account for, right? So some market making strategies are basically based on making money off of the noise, essentially, right? And I'm just saying there are some areas where the noise will be higher and that noise might be higher than the amount of risk that you're willing to put on. Fair enough, right? Oh yeah, price insensitivity equals toxic order flow and generates price distortions. Yes. Exactly. But that's exactly it. That's exactly why they're so great to trade, right? So the price is going to keep going until they've bought enough of it, and they don't care what the fundamental value of it is or any of that stuff at all. And so the thing that we have to know is that the guy is going to buy, right? That's why, like, changes in expectations based on current economic conditions, that is one reason why there's a lot of people that out there that are trade, but there's other groups of people that are trading off of completely different sorts of things. So we kind of have to combine all of them together and determine when there's a situation where there's a big enough imbalance that you know which way it's going to go pretty confidently. Well, so I wouldn't say I only use order flow. So I would say that there's really 5 components that you need for an effective strategy. One of them is order flow, one of them is correlations, and one of them is volatility. And then the other 2 are risk management, and then the crowning one, which is predictors of order flow. So it needs information that you know about the market that can potentially predict future orders, right? Because I'm reading the order flow, this idea that I saw an iceberg there or whatever the deal is, and that highly predicts what's going to happen next. I don't believe in that. I mean, I've tried to do that sort of stuff. Maybe there are edges that exist there. It's really hard to backtest and prove those sorts of things. But what we can do is we can know that, you know, because of this fund and this fund, that there's this X amount to buy. I feel like that we've had 30,000 contracts that they should have a very difficult time keeping that up. Geez, they are plowing into some really big icebergs down in here, man. Nah, I haven't automated the strat. I think price is all you need. Well, good luck with that. Well, just think back to what we're saying, because this is my favorite conversation that I'm having with Lucas, right? Okay, so if there's a lot of noise in price, then how is analyzing price ever going to bring you an edge, right? Because essentially, whatever kind of edge that you might be able to glean from looking at price alone is going to be canceled out by the noise, because the noise is bigger, right? Okay, some strategies do not clear RAM during optimization. Do you have some advice? Okay, so yeah. The big thing that will kill you is that NinjaTrader by default will track or wants to have every let me organize my thoughts here. So the problem that you're most likely to run into is that every trade basically gets saved by NinjaTrader by default in the back testing, right? So if you come in and you do 100 iterations, basically what it's doing is it's keeping all of the data for all of the trades and strategies that you ran times like 100, and that can end up being like insane amounts of memory. So there's a property, and you'd have to go into the documentation to find it out. I can't know it off the top of my head. But there is a property that basically says don't save the results. It will just save like the overall conclusions, and it doesn't save all of the individual trade data. And that will save you a lot of memory when you're doing an optimization run. Okay. Now the other thing is there's a property called is instantiated each iteration, I think is what it is. So basically, if you program your indicator correctly, and I don't know if I really have a whole lot of tips on how to do this, but if you're a programmer, you figure it out. You can make it so that when the strategy is recreated, the properties in your indicator reset themselves, and they don't need the indicator to be completely recreated in order to reset, essentially. So if you do that, then some indicators that are doing things like, creating all these data structures and doing all of this sort of stuff, right? That can be expensive, and that can also make a backtest take a long time. So those are two things that you can do that can kind of help you there, potentially. I believe price can work as long as it's swing trading. The higher your holding time, the less important the order flow is. Well, I would still come back to this thing that, like, okay, so if you are doing a momentum strategy, right? Which is you have a bunch of different assets, commodities, and you buy the one that's up the most and you sell the one that's down the most. Okay. Is that using just price? I suppose it is, right? Because the primary input that you have in there is price, but you're not doing price on a single asset. You're doing price on like 100 different assets. So it's actually a different thing, right? You're taking advantage of like money flows in the market overall as a whole. But what I'm saying is, if you're just taking a single time price series and you're trying to make good entry signals based off of that, just that one data series, I've never seen anything that just price was beyond the statistical margin of error. I've never seen that. Oh, thanks. Yeah, I'm really proud of the videos that I have, so just go and watch the videos on the channel. Well, you just said it. There's a lot of noise, but some of that action is signals. So you are looking for the signal while distilling the noise. Yeah. Well, and the I guess the kind of the key is finding an area where the signal that you get is strong enough to overcome the noise. Is the hard spot. Like in this situation, I think that I've got a good chance of this coming down eventually. But obviously there's going to be quite a bit of angling around, and how much of that is actually going to go through, and am I going to get a good spot on it or not, and do I get good risk reward on it or not is a little bit. That's kind of I guess that's where it becomes kind of an art and a skill. Well, okay, so isn't order flow mostly noise? I think that what most people are trying to do with order flow is noise, yes. But what I'm saying is that, okay, so for instance, we just had a bunch of economic numbers, right? We had the ISM PMI, and we had the job openings number, okay? And then there's the ISM prices. Okay, so off those three numbers, and then after those three numbers, we had 30,000 contracts net long in the 10-year Treasury. And what I'm saying is that there are situations where you can predict, based on what just happened or what the piece of information is that you have, how many contracts are going to come through, like what the net long is going to be. Is what I'm saying. That's what I'm calling predictors of order flow. Right? So yeah, if you're coming in here and you're looking at an iceberg and it's like 4,000 contracts and all those sorts of things, then yeah, it's kind of like, that is kind of noise. But 30,000 contracts net long, that's not noise. That's how you get from 14 to 26. Right? But, those 5 things that I mentioned earlier, so order flow, correlations, or related or correlated assets, volatility, risk management, and predictors of order flow, or what we could call informational asymmetry, okay? Those are 5 things that we know and can prove there is some edge in. So that's why I say you want to incorporate all of those things into your strategy. That happens mostly on news days. Well, most days are news days, though. I do take a lot less trades when there's not economic numbers, but sometimes it's like the end of the month and I know something about where they're going to go on the end of the month, or, you know, there's lots of things other than just economic news that moves them. But, and I guess the other point that I would make is I'm not saying that it's easy. I'm just saying that based off of the information that we have, you're going to have an easier time finding edge from all of that than you are trying to stare at a chart all day and find some sort of pattern that's consistent. You're extremely unlikely to find that pattern. If you were a math PhD, then maybe you might have the skills to do that. And even then, they're hard because the market is competitive and people are looking for those things all the time. You heard of Kevin Davey? Well, that name certainly sounds familiar, but I can't recall who they are off the top of my head. Sounds like a pirate. Was he a famous pirate? Is that... Just kidding. I should be careful saying things like that because he's probably a real person who's going to come and be like, Seth, why are you calling me a pirate? That's not cool, Seth. There's big icebergs on both sides here at 26, man. It kind of looks like you got 2 big players and they're going to meet right in here. Oh, is that the Kevin of KT Systems or whatever? Yeah. He's good. I think he should make some order flow indicators and try those. But at the least, he's taking a real approach to it, right? Dude, how big do you think these are going to get before they go through one side or the other? And what is it going to do after that? Because it's been stuck in here for a while now. 7,000 on both sides. There's somebody big. Somebody big on both. There's 2 big traders here coming together, essentially. Okay, well, they took it offer. I took another trade in here, but I think I'm being too early. Would you consider VWAP as order flow? I mean, yes and no. So this kind of gets into the etymology argument that I like to make that is maybe interesting to me, but not so much to other people. But the question is, like, what do words actually mean and where do they come from? So some people think that order flow is a strategy, but it is not. Order flow is a type of data, right? And an order flow is a type of data informed by the market depth is what I would say. So VWAP, you do not need market depth data to calculate VWAP. So I wouldn't strictly call VWAP order flow, but it's related because you are trying to look at volume across the variety of prices. You find, yes, I rely very heavily on cumulative delta. So, like I was saying, when I came in earlier, remember I said, we're 30,000 contracts net long. Well, how do I know that? That's the net change in cumulative delta since the news. That's where I'm getting that from. I'm not sure if the link that you're giving me is working correctly or not. Let's see here. Oh, this is a study about different participant types. That's cool. Well, I still think that I was maybe early, but it looks like they busted out and then they came down. And now I'm still seeing big offers, so. Okay, I want to automate something with Delta. Can you get Delta back to 2008? No. So, the data that I have is enough to know like every order going back the whole history of the S&P 500, but it wouldn't give you the depth information to be able to determine whether an order was a buy or a sell. Cumulative delta is order flow, right? You have to look at an order came through and what was the best bid and best offer to determine which side was the aggressor, right? I don't have that data, and it would be like ridiculously expensive to get it. Save the data if you can. Like if you make, I have my indicators, the speculator set indicators. If you're running those, they output their data. Like save that. Yes, it's so hard to really test these. That's exactly right. That's exactly the challenge on a retail perspective is we don't get enough quality data to really scientifically verify these things. Now, there are stylized behaviors of the market, created by market microstructure that are proven in empirical studies that are very relevant to how the order flow behaves. They're very important to us, right? And I have a video about that called Proven Market Behaviors, I think is what it says in the thumbnail. And that kind of talks about the things that like that I'm really confident that we know, right? But there's other things like, okay, can the imbalance between buyers and sellers in the order book itself give you information that will assist in your trading, potentially, in a system? I think it's a good theory. I think it's a good place to look because not very many people have the skills and information available to be able to look at that and find an inefficiency of that nature. But I don't really actually know for sure because I haven't gotten far enough on my analysis to say those sorts of things. So your thesis is that price is not good enough for long-term for an edge. You need other factors. Yes, that is my thesis. But let me, I mean, that's my answer to your question. The larger thesis that I'm trying to teach in this channel, like the bigger thing that the empirical evidence very, very strongly suggests, okay, is that the market is extremely efficient from a technical perspective, but not very efficient from a fundamental perspective. Which means that if you go in and you do a statistical analysis of the market, whether it's order flow or correlations or whatever, you're going to find that the market is very efficient. And that's because if you find an inefficiency, you're going to start trading it. You trading it affects the instrument, and that is ultimately going to remove that edge from the market, especially if everybody knows it. So the market's very statistically efficient, but it's not very informationally efficient. So what I mean by informationally efficient is the current price fully reflective of all available information? That's what the efficient, strong form efficient market hypothesis says. And the information that we have suggests no, it's not. That the prices are determined primarily by the orders that are placed into the market. And sometimes you get orders that have absolutely nothing to do with the fundamentals whatsoever, but they're so big that they move price a considerable amount. And so informational inefficiencies are abundant. And every once in a while you can find a situation where those informational inefficiencies will tell you that a specific flow is about to come in and take advantage of it. So that's the main thing that I want you to get from this channel, okay? Because that changes your approach considerably, right? Now, all of a sudden, all of the things that most retail traders are doing by whether they're watching a chart and they're trying to find some pattern of some sort, right? What we know about markets suggests that while it's possible, it's a very difficult game, that there's not a whole lot of edge there. Whereas looking at the market and using the things that we do know that we can prove, in addition to knowing what's going on in the market and finding those informational asymmetries, that there's likely to be more edge available for us in that. And so that's why I trade the way that I do. It's because that's what my research about market microstructure suggests will be the most abundant and easiest way to trade. Obviously, if you found a statistical inefficiency and you really truly found one, and you know how to size the trades correctly, because that's another problem, is you get too big, and then you could kill it all on your own. But if you know how to size your trades appropriately and everything, then that's going to be a lot more consistent. So there's some real advantages to go and finding those statistical inefficiencies. And we do a lot of work, and I have stuff that can teach you how to look at those things, but I think you're going to find that it's super hard. Super hard. I had a swing long in oil when it dropped in negative territory in the futures. I think CFD price for a new contract was 8 and it held until 30 because I thought the price of oil being single digits was just super wrong. Well, but you're not just using price in that particular instance, right? You're using, that's a direct example of using informational asymmetry, is you're saying, what I know about the market says that this price is stupid, right? And it's only going down because of these technical reasons that are leading these flows in here. So I should be able to wait for that to all calm down and then buy oil. Yeah. Informational asymmetry. Do you find most of these YouTube well, I tell you what, I don't think I've ever seen a YouTube advertisement for something trading related that I would support. I've never seen that. It could be wrong. It could happen, but I would say I'm really unhappy with the current state of what kind of ads tend to be served to people. I wouldn't say that it's like mostly negative, but I think YouTube could do a lot better at, vetting the advertisements that they run better, In this case, I just entered on the price. I didn't really look at chart or order flow. Maybe I could. Well, okay, but you did incorporate other information into your decision making, right? Like, if I just transported you 50 years in the future and you saw that oil was at 0, would you know to go long there? Because maybe oil is just useless in the future. You don't know that, right? There's all sorts of other information that you know about the oil market that tells you that that price doesn't make sense. Right? When I'm talking about price alone, I'm talking about you using the past history of the price and some sort of analysis of that past history of that price, that data series alone. And it would have to be like, you wouldn't even know what the asset is, right? I would just give you a random chart. You don't know what asset it is, and then you just analyze that chart to make entries. That's what I'm talking about when we're talking about what edges they're in, price. Of course, I've heard of Renaissance Technologies. For sure. But do you also see how like informational inefficiency is like could be almost anything? It's like such a broad thing. There's going to be little edges everywhere in the information that you know about markets. That's why it's kind of like the dichotomy that we make between fundamental and technicals and all that aren't really very useful to you, right? What really matters is does the particular piece of information predict future orders? That's really all that matters. They use so much alternative data, it's crazy. I don't, I've never heard a whole lot about how dependent on alternative data they are. I'm sure that it's probably changed over time. From the interviews that Mr. Simmons have given, they kind of suggest to me that what they do is they'll go and they'll find, they'll do a statistical study on the market and they'll find a piece of information. So for instance, volatility. We know that volatility tends to cluster, right? If you had a big day of volatility, that you're likely to see other big volatility days around that time period, right? And what you do is maybe you find 100 different things like that, and then you combine it all together in a machine learning model, and when you combine all of those things together, then you end up with something that's really effective, right? So that's one of the big things, is like, maybe we do find, like, you're doing a study and you're doing back testing and you do find an aberration, right? Well, maybe it's just that one thing on its own is not enough and you need to combine it with 20 other things that you've found. We haven't really gone super deep into that. If I would buy it for 50 years in the future, I mean, if it's still listed for future trading, that there'd be some interest. Maybe. If it's still listed, that's true. That's true. But oil can go negative. That's another thing that's interesting. Is it also kind of depends on like your time frame and how much risk you can put on. And because when that happened, I think we all knew that oil was a buy. It was just like, could you buy it at that exact moment and not get your stop triggered was the problem, right? Well, we just got 2 ticks down there. So we're actually getting some counterflow now, essentially. Yeah, it only went down for a few hours. Well, yeah, but $5 to $6 is like $5,000. I wouldn't have been able to hold that. Even if I was on the micro oil contracts, I wouldn't have sat through a $500 drawdown. Like, you get what I'm saying? It takes money to make money, doesn't it? That's why I say CFDs. I'm not a huge fan of contracts for difference, though. There's a reason they're banned. So when I'm looking at the chart, I'm really interested in if they come back to this 20 area. I'd say 4.8 is kind of a significant level over here. So those are maybe some psychological levels that I could look for. Overall, we have seen a shift that we've moved down about 10,000 contracts or so. So it looks like that the trade that I was trying to make was correct, and I took it way too early and got scared out a little too easily. But will I get the $20 or $25 that I would like? That remains to be seen. Yeah, you can always do, you could always trade the oil ETFs and the options too, I suppose. Although the problem with options in that situation is that volatility is going to be really high, so it would really have to move for you to make your money on that one. But I did, sometime after that, I did buy oil calls and made like $2,000 or something on one of those trades, right? That was actually probably my biggest winner, was the oil one. I took it on the options. Oh no, the 30-year kind of came up there and is kind of like working against me now. Oh, and you know what? It's 9:03 as well. I think that what I should do is just scratch this. I mean, this will put me like break even for the day and shut the stream down because it's time for me to get going. You guys got me talking too much. But we'll be back in a few hours, so I'm gonna close things now. So I will see you guys in a few hours. In the meantime, stay excellent, team.